Okay, what is up, traders? What's up, tycoons? Super excited for today's video. Going to give you guys a look at TNX first, then we'll jump into TLT. We'll also take a look at HYG, the high yield corporate bonds. I'm going to give you guys some breakdowns of all of the different bond sectors and the things that I'm looking at. Okay, it's going to be a shorter video, just basically covering the TA. And then later on this week, probably Monday or Tuesday, I'm going to give you guys a nice in-depth overall market synopsis and my take on where things are heading currently. We've got a big week coming ahead with earnings season, and earnings season is going to affect the bond market, right? If earnings are really bad and people are scared to invest in stocks, that's going to attract more money to the bond market, right? More institutional and really big money is going to say, okay, hey, maybe the stock market isn't ready yet, and maybe there's still some more time to invest in bonds, whether it's short-term bonds or long-term bonds. And then we can come back into the stock market at a later time when things are at a discount. So a really good way to measure whether bonds and how bonds are doing is to look at TNX. Okay, this is the 10-year treasury note. When you see, and this is the yield specifically, right? So when you're seeing rates go up, bond prices are going down. Okay. And when you're seeing the yield go down, you're going to see bond prices go up, right? So what this means is that as TNX is going up, the price of TLT generally is going to be going down, right? And as this decreases and drops, the price of TLT is going to be going up. So that's it. We're going to get straight into it, okay? We were tracking this head and shoulders originally on TNX. We also had a bearish divergence. Okay, if you're not familiar with bearish divergence, take a look here. Okay, so we're making higher highs. All right, so clearly, the 10-year yield was in an uptrend heading higher. If we look at our relative strength index, okay, we can see we have a high and then actually a lower high at this point. So this is simply known as a bearish divergence. The reason that I'm highlighting this is because we have not broken this bearish divergence trend line, okay, ever since then, right? So bearish divergence is when, the price of something is going higher and the relative strength index is going lower. So you're making higher highs on the price, lower highs on the relative strength index. That's bearish divergence. We just recently got rejected at it again up here. Now I had two patterns I was going to be tracking, right? If Fed was going to be more aggressive and keep raising rates, it's very possible that we were going to see TNX, the 10-year treasury yield, go up to 4.5%. All right, that's definitely very possible. But what we've seen is we're starting to get our ABC move to the downside. Now there's two gaps down to fill on TNX. If you're not familiar with gaps on the daily chart, they fill about 90% of the time historically. The big question is, when are they going to fill? So I love to track gaps and really just see when things are being drawn towards the gap, if there's a possibility of a gap filling soon and not, right? So I had a bullish scenario for TNX, right, and which would result in a bearish TLT. And we are actually getting the bearish scenario so far. We're getting our ABC move to the downside, potentially to fill this gap here on TNX right around 2.8, 2.9. Now I'm not saying that has to happen anytime soon. We actually are forming a little bit of a double bottom right here. So things could turn around and we could get some type of a W pattern. Okay. You have to keep an open mindset to things. One thing that I really love to use besides the relative strength index is going to be the MACD. If you see here, we have the blue line crossed below the orange line and then the blue line crossed below the orange line here. It's no secret we've been in a bear market. So I love using the MACD for sell indicators. And what you see here is it crosses below here. And then shortly afterwards, we get a large move to the downside. Over here, we crossed and then we got a large move to the downside. So pay close attention to the MACD, start monitoring some of your gaps. These are really the three main levels that I'm watching on TNX right now. But that's it, okay? I just wanted to show you guys that for now, things do look bearish on TNX, which would be bullish for the bond market. But, now is a really good time to be patient. I've been saying that for basically the past week, okay? You can day trade and scalp, which is, pretty much my favorite thing to do. And you can swing trade when you get the proper signals, right? So, we got a sell signal over here. That was a good swing trade, right? You see, we've resulted in dropping down. So, the first signal that we had was we rejected our bearish divergence trend line. Then shortly afterwards, we got a second signal with a MACD sell signal, and boom, we drop, right? So that's more of a justified swing trade, in my opinion, versus just trying to buy, blindly hop in at prices like these. Now, if you notice, we are building a little bit of a bullish divergence, right? So if you take a look here at our relative strength index, what we can see, all right, is, let me draw it up for you guys real quick. We're making higher lows, okay? So we have a low here, and then we actually have a lower low right over here. See how it's slightly lower, but on the relative strength index, we have a low and we have a higher low. This is known as bullish divergence. It's the opposite of bearish divergence. Okay, and it's an indicator we may see some type of bullish activity. We've already gotten a slight bounce, but this could carry TNX back up, which would result in TLT dropping, right? So, use all of these things. What we're going to look for is, okay, now we have bullish divergence. Let's see if we can get a MACD crossover to the upside where the blue line crosses above. If that happens, then that's going to be another bullish signal on TNX. Now we're going to have two bullish signals, and we could see TNX rise and play out this double bottom / W pattern. Okay. But yeah, so let's go ahead and jump into TLT real quick and take a look at what I'm seeing there. Things actually look good. I mean, like, honestly, things have been going to plan, right? And there's always times to use caution. So if you haven't been watching any of my videos on TLT, what we're doing is we're tracking a 5-wave structure to the downside. Okay, we have 1, 2, 3, 4, 5. Bring in TLT anywhere from about $80 to $90. Now, the way it works is wave 1, wave 3, and wave 5, if everything goes to plan, are going to be 5-wave impulsive moves. So let's zoom in a little bit and let's just see what I'm talking about so you guys can understand. Okay, so here's our wave 1 right here. We have a 1, 2, 3, 4, 5 down, right? So after your wave 1, you get a bounce for wave 2, wave 3, wave 4, wave 5. Okay, that's how it works. Now your wave 2 and your wave 4 over here, these are going to be what's known as corrective waves. So they're going to be an A, B, C up. So you have an A, B, C. Now look at how perfectly it's worked out. After we completed our C wave, we ended up getting another 5-wave move to the downside for a larger wave 3 structure. 1, 2, 3, 4, 5. Okay. And it happens time and time again. It's happened on TLT for the entire year of 2022. We've been following and respecting this structure. After we got our 5-wave move down, we got an A, B, C correction up. And these are the times when I'm telling everybody to be cautious, right? When you're basically at the end of a wave, that's when you want to be cautious because you don't know if it's going to keep respecting that wave and that structure, or if we're possibly going to break out and make a new structure. So now that we've gotten our ABC corrective wave over for our wave 4 up, that's this D wave right here, we've already got our wave 1 down, and we called the bounce right here, right? I made multiple videos saying, hey, most likely we're going to get a bounce. We're retesting this trend line. If we zoom out, this trend line is very, very important. We've been rejecting it multiple times. We broke out, we retested it, and it would make sense for us to get a bounce there because that's the bottom of our wave 1 of our new 5-wave structure to the downside to complete our overall structure, heading it down to 80 to 90. Okay. So if you look here, we got our bounce, we've moved up, and a lot of people didn't expect it to move up this high. But if you've been watching the videos, we've pretty much been anticipating this. Now, look at what it's doing. We're starting to actually drop, right? And so remember what I said about TNX, the 10-year yield. When you see that start to go up, it's going to result in bond prices going down. So TLT, the past 3 days have been pretty bearish. Okay, we got a reversal candlestick here and then 2 red candlesticks after that. Now what we're doing is we're currently testing our support level right now of 106.33. There's 3 major retracement levels that you need to pay attention to. They're the 61.8, 50%, and 38.2. If we zoom out real quick, I'll give you guys a great quick tutorial on how the retracement levels work and how they've worked essentially for the entire year of 2022. We're going to see if they continue to work in 2023. So nothing moves in a straight line up or down, right? Nothing moves like this and nothing moves like this. You get a move up, retracement, continuation, or a move down, retracement, continuation. You can spot a reversal when you break through those retracement levels, right? If we do something like this, that's how we can spot reversals. So we take our swing high, connect it down to our swing low, move down, retrace, hit the 38.2, continue lower, right? And over here, we have a new swing high, new swing low, we move down, retrace, continue lower, right? And we're rejecting our 3 major retracement levels time and time again throughout the entire year of 2022, right? Swing high, swing low, move down, retrace, continue down lower. Same thing over here, right? And you hit different levels at each point, okay? But, this time we came and we hit our 50% retracement level, continue down lower. Most recently, on our most recent structure, we rejected exactly at the 61.8% retracement level. That's right here, this candle right here. You can see 109.72. That is our major retracement level. If we're able to break past 109.72 and flip it to support, then we could be breaking this, five-wave pattern to the downside. But for now, we got our bounce, we moved up, we filled the necessary gaps that we had to fill on the chart. That's what these blue boxes are right here. So if you take a look, there's one gap up to fill, and then there's a small gap down to fill and a larger gap down to fill as well. Keep in mind, these gaps fill 90% of the time. The big question is when, right? So I'm not saying that we're about to fill the gap up or that we're about to fill the gaps down immediately, but you can have kind of a little bit of a sense of direction once we start to head in these areas where some of the possible targets are going to be. But if you look here, we're completing our wave 2 structure and we've started a move to the downside. Now, we still can break out, right? If you look, this is a little bit of a bull flag structure right here. So, if we stay above these lows right here, and really consolidate, that's going to be healthy consolidation for a possible move to the upside to fill this gap on TLT right around 111.5. But otherwise, we got our wave 1 down, we got a wave 2 bounce up, and we should be starting a wave 3 down here sometime soon, which would take us to fill this gap down. Okay, now we may come down and retest this trend line again and then bounce off of it. And that could be the start of our wave 4. Okay, so just keep all of these possibilities in mind, and keep in mind the MACD. Okay, the MACD is very important and very pivotal. If you look over here, we got a MACD sell signal, blue line crossed below the orange, and look what happened. We got a huge move to the downside. Over here, we got a MACD buy signal, blue line crossed above the orange line, and look what happened. We got a large move to the upside. Right here, we got our MACD sell signal, which when we were tracking this ABC pattern up, I said, don't be aggressive in the shorts, wait for a MACD sell signal as confirmation that we've completed our ABC up. We got the MACD sell signal. We had a move to the downside. We're bounced off the trend line. We expected that because that's our wave 1 of 2 or wave 1 of 5. Target was really in that area. And what we're seeing now on the MACD is it's starting to curl down a little bit. So it's going to be really interesting to see, is TNX going to continue its bullishness, continue to start to rise and result in a TLT dropping? If that's the case, it could, bring this blue line back down below the orange line. But for now, it's still a time to use patience. Okay, we haven't got a sell signal here confirmed. We are following the structure a little bit, right? So we got our wave 1, wave 2. We've started to pull back, but we need to be cautious, okay? Because as I said, we have that bull flag structure right here, and we really want to be careful not to get in a bear trap, right? We could get caught in a bear trap. But keep in mind what I said about earnings. If earnings is really bad, that could result in investors flooding to the bond market, right? Now, mostly that would be short-term bonds, okay, in my opinion. And TLT is the 20-year plus bond ETF. So, you're going to see it mirror the S&P 500 SPY, the SPY ETF closely, right? So if you start to see SPY rising, most likely TLT is going to be following that. Okay. And, they're going to move in very similar patterns and very similar structures. So, big earnings week coming up, huge earnings week, huge earnings season is upon us. And that's going to have a big effect, not only on the stock market, but also the bond market. Remember, the bond market is much more massive than the stock market when it comes to the amount of capital inside of it. And so investors are really going to be deciding, hey, do I want to pull money out of the bond market and put it into stocks, or investors are going to be saying, I'm pulling money out of the stock market and putting it into the bond market. This type of stuff will affect it. So yeah, that's basically it, right? We're still pretty much tracking and following our patterns with the wave 1 down, wave 2 up. We're going to see if we can get a MACD sell signal, and that would confirm our wave 3 down, the beginning of our wave 3 down, at which point we'd be looking for some type of a bounce between about 91, potentially up to about 96 is where we could get our wave 3 bounce to start heading up to wave 4. And then afterwards, we'd look for wave 4 to come up to about 98 to about 101, 102. Once we come to there, then that's when we're going to try and get our wave 5 target to about 80 to 90. Okay, so we'll move on to HYG real quick, high yield corporate bonds. And if you take a look there, we were tracking two structures. We had this larger descending wedge, a falling wedge pattern here. This is a bullish pattern. We were looking for a breakout to the upside. If we zoom in a little bit, what we got was a look above and fail right over here. Okay, so we initially broke out past this trend line, got a look above and fail. And once this happened, I said, hey, this is a bearish sign. We're most likely going to see a drop. Okay. And sure enough, we did get a drop. We were tracking this rising wedge right here, and we ended up breaking that. But what we've done here is we actually ended up getting a look below and fail, right? We held our three major support retracement levels. So on TLT, we were looking at our retracement resistance levels, taking the highs down to the lows and tracking a retracement like this. In this one, we were tracking our low to the high. So this was our move up, our retracement. We held the 61.8% retracement level, and we've continued up higher. So HYG looks a lot more bullish than TLT. If you take a look here, we have a high and a higher high. We haven't made higher highs yet on TLT. We have a small gap up to fill right here on HYG. And if you take a look, HYG's most recent day in the market was actually a green candlestick versus a red candlestick. So, but we're looking at our MACD here. The red line or the blue line is starting to curl a little bit down below. We're going to see if it crosses that orange line. If it crosses that orange line, very similar to TLT and all the other things we looked at, it's going to be a sell signal. And so we're going to see, hey, was this all a fake out? Was this a break below retest? And then are we going to come back down? That's a very good possibility. But for now, it's a really good time to be patient in the market, right? If we continue bullishness, we continue making higher highs, you can try to play long. And if we end up getting that MACD sell signal, you can try to take a position short and really ride the momentum down for the next possible entry or exit off of that short position. So hopefully you enjoyed the video. If you did, smash the like button, subscribe to the channel. That's going to be it for today's video. And I'll give a more in-depth market review where we take a lot more look at things than just TNX, TLT, and HYG. So stay tuned for that in the upcoming week.